Good afternoon. Welcome to today's investor webinar for Mayur Resources. ASX code is MRL. And today we have on the line Mr. Paul Mulder, Managing Director of Mayur Resources, who'll give us an update on the latest activities by the company in the June quarter 2021 and their exciting outlook for the year ahead. Now, first of all, a couple of housekeeping items. Everyone is on mute right now. However, you can submit questions if you haven't already done so via the panel. So we'd love to get your questions. So if you have any questions for Paul, please submit them via the panel, and we'll try and answer as many as we can. Today's event will run for about 1 hour, end on time. Again, everyone will get a recording of the event. So if you miss anything, you can play it back again later. And again, if we miss any questions today, we'll try and get back to you later with a response. Now, we've got quite a few on the line already, which is great. So thanks for your interest in Mayur. And just a quick poll, if I can, first up, on how many people out there are shareholders. So if you'd like to take a look at the poll there, are you a Mayur shareholder? Yes, which in case we love you. No, have been previously. So 3 answers there if you'd like to give us your feedback on whether you're a shareholder. We love our shareholders, and anyway, it's great to see if many are on the line today. So just waiting for the results to come in, and we've got a great turnout as it is already. So thanks very much for your interest in Mayur. And we'll just give this another minute or so. So thanks for your responses. Okay, nearly everyone's voted. So let's close the poll. And let's look at the results. Are you a Mayur shareholder? Yes, 69% and 31% no. So that's great. Great to see all those shareholders on the line. And for those who aren't, today's your chance to ask questions to the company and maybe look at investing in the future. So thank you again. Okay. Now, without further ado, I'd like to hand over to our main event today. Our presenter is Mr. Paul Mulder, as I mentioned, Managing Director of Mayur Resources, PNG-focused company with a range of mining and energy projects in Papua New Guinea. Now, I'm sure most of you already know Paul, so I won't go into his background too much. If you'd like to read more about Paul, please have a look at the website. Now, Paul will give a quick rundown of the quarterly report, so I will just I'll put that on screen right now, and I'll now hand over the mic to Paul to give us an update on the latest quarter. So, Paul, if you'd like to engage your phone. There you are, Paul. Good. And I'll leave the mic now over to Paul. Thanks, Paul.
Okay, well, thanks, guys. Appreciate everyone joining today. I'll just get this adjusted a little better. As you know, Brisbane, we're all in lockdown, so we're all working from home at the moment. Look, thanks everyone for joining in. And look, I'll probably only go for 20 minutes giving an overview, so there's maximum amount of time for information as it relates to the various projects that we've got, and get some decent Q&A going. All right, so Anthony, if we could just move down more so so we can see the text of the quarterly report. Thanks, mate. Okay, so just sticking with the highlights here. As you may be aware, we completed a very small capital raise in the last quarter to professional and sophisticated investors. That really came from, I guess, part of that was this last webinar that we produced, that there was some key investors, particularly key existing investors, that could see the same value that we as management have seen in this project. And I'll give you a little bit more colour on that a bit later on. We had Rob Neal retired from the board, having been an advisor and director for the last 5 years. Mr. Frank Terranova has stood in the acting role, but I've made it clear that we're conducting a current search with regard to the board, how we end up structuring the board. and what type of new talent we bring in is going to be really key to see, I guess, the next stage of our development. Whilst the share price might not reflect it, we have 3 projects that are basically shovel ready. And so the key parts of final offtake, debt and equity structuring and construction is really the key focus now for the company across its 3 projects. The actual development work, study work, exploration work, etc., that's all done. So from that point of view, this is all now about execution and ensuring that the board has the gravitas and also the capability and capacity to deal with these projects, and also continue to execute on our disaggregation strategy. What I will say in that regard also is that, as some may not be aware, the percentage that aren't shareholders may not be aware, as the founder, I'm still the largest shareholder by a significant amount. Typically, these type of founders, either elected or will always generally be on the board. I want to work in the businesses that I'm a part of, and this business is really is my life, and that's what I've engrossed myself in as a managing director. How the board and the structure of the board plays out, this will be announced in short order, but you can be assured of my continued and even more focused alignment with shareholders in ensuring all this hard work for the last number of years is now brought to a head with some actual projects getting funded and into construction. So we've got a clear pathway to cash flow. So, I take very seriously the next steps that the board takes, and how we're going to ensure success. So if we go into now the Central Cement and Lime project, I guess the appointment of Trent Alexander as Chief Operating Officer, ex-Adelaide Brighton and Brickworks, has a huge amount of experience in quarrying, was instrumental in setting up the cement import terminal into Australia, which really bodes well with what our thematic is on the cementitious industry in Australia, whether that be lime, whether that be clinker or cement. The reality is imports are increasing. We will be the closest producer to Australia, so we need to be front and centre ready for that. And Trent's experience really has gone well, and look, that will with the company, and that will become very evident in short order when you see some news flow catalysts coming out that articulate and bring to the fore all the work we've done, and what Trent's contribution to that will be. We've continued with the government and community stakeholder relations. Now, what's involved here, just to give the audience a little more colour, is that with a mining lease granted, whilst one has the ability to go and build and operate the facility, there's a process that works with the state, and that process is a memorandum of agreement that utilises part of the framework, legislative framework under the Mining Act, but also at the same time reflects the arrangements that we've arrived at with landowners, with local level government, provincial government, and the state of PNG itself. A fairly well structured process. We've done a lot of the background work for that. This doesn't stop the development. All this does is really give guidance on how landowners will be used, what agreements, what spin-off businesses are there, what the fiscal regime is in addition to the terms outlined in the mining lease, and those sorts of other key fiscal matters and also operational matters. That's largely been drafted from our end, and we're working with the PNG government at the moment in finalising a position that the state of PNG is happy to continue and indeed commence and then formalise and then finalise via execution of an agreement the MOA. So it mightn't sound like a lot. There's actually a fair bit in it, but a fairly well-trodden process. We've continued on the quicklime side of things. I think just as a recap, we had originally demand in the definitive feasibility study for 1 kiln. Why did we have 1 kiln? Well, we looked at P&G and we looked at the current users, the likes of Newcrest, St Barbara, Ramu Nickel, just to name a couple. There's obviously Harmony and a couple of others there as well. So just existing projects utilise more than 1 kiln of quicklime. Kilns around 200,000 tonnes per annum of quicklime. We've had a large number of inquiries, as I've said publicly before, since the mining lease grant from Australia and the Pacific in relation to the provide of our limestone, our high-grade limestone, and also the quicklime product we're proposing to produce. Now, as it stands at the moment, we have demand for more than 2 kilns already, and there's a very strong demand out of Australia on the east and west coast. The reality is imports are making it into Australia already, and it is going to be a trend that you'll continue to see in the future. For those that haven't been aware, we've got the Thais that have entered into the WA space. You have the Malaysians that are continuing to try and enter the Australian space. You have the Malaysians and the Thais that are already providing quicklime for P&G's needs. So when I mentioned before about 1 kiln, 200,000 tonnes of material, that's being supplied by international importers out of Malaysia and Thailand, which we'll obviously replace when we're in production. Being a local supplier there, our quality is equivalent, if not better. Our supply chain is better. We are a local supplier, and all the companies with license to operate over there commit to support local if you can demonstrate price, quality, supply reliability, etc., which we know we'll be able to do. So I think the key takeaway here is the market that we've got currently, the construction bids we've received is for 2 kilns. The definitive feasibility study for those 2 kilns has basically been completed. I know I've seen the draft definitive feasibility study. And from that point of view, we see it as a very robust project. The economies of scale that one generates with an additional kiln is attractive. And look, I'd be very ready. Put it this way: from the point of view, if you said to me, Paul, do you think you're going to stop at 2 kilns? The answer is absolutely not. We won't stop at 2 kilns. The market in Australia is 2.5 million tonnes. There's been a couple of major groups that have had a stranglehold on that don't have that stranglehold, and the erosion of that stranglehold will continue to occur, and or there may be some type of coming to Jesus moment where some realise that the writing's on the wall and they either have to participate strategically with these imports, us being one of them, or essentially the market share be taken over to some extent, because there's a big focus now on value in use, not just about price. Now, I think one of the other things that people don't appreciate about this quicklime business is it's a very green-facing business. So what do I mean by that? It supports green-facing metals. So if you look at nickel, you look at rare earths, you look at cobalt, you look at all lithium, all these things need quicklime. If you don't have quicklime, you're going to be in a pretty difficult situation, because you won't be able to produce. So if nickel production is going to double or triple, so is the pro rata, the use of quicklime, and it's got to come from somewhere. So we see this supply chain demand pull being very, very prevalent in the coming years, and we're positioned perfectly for it. And the fact that we've taken such huge inquiry and even been willing to double the capacity of our kilns, which we think will go beyond in a decent amount of time in the medium term, shows our confidence in what we're doing, and the market should be informed of that in fairly short order. The other point around marketing progress with the execution of several new commitment letters of support, that just really bodes well with what I've just spoken about. When we believe that those respective letters are in a form that we're comfortable with, we will release those to the market. And indeed, we've got permission to do that from those parties. So when that's in the right form, we will be able to do that. In relation to the iron and industrial minerals, we are still continuing on with our rebadged and disaggregated plan for Autus Resources. The reality there is that our current market capitalisation doesn't even reflect even a fraction of the value of just this single project. Just as a recap, this single Oricolo Bay project, forgetting the other mineral sands projects in the portfolio, the Oricolo Bay project at a $66 a tonne iron ore price has a NPV of 131, 132 million US. So when you look at our market cap, and that's at $66, you ask yourself the question, if iron ore stays at 80, 85, what's the NPV? You can work that out quite quickly in relation to that. So I think, look, one of the things that we need to be focused on here is that we still see huge value in a very simple resource to be established. Richard Seville, the ex-MD of Orocobre, the lithium project, I think $1.5 billion project that's now merged with Galaxy to form a $3 billion venture. Richard still sits on the board as a non-executive director of that, and he's been very, very keen to obviously get involved and see the arbitrage that we currently have at the parent company released, and having that arbitrage released, we believe disaggregating and Mayur being able to keep a lion's share of the economics in this new disaggregated spin out, we believe is going to be the best thing for shareholders, so that we can be seen peer for peer on a comparables basis with others. So, you know, in saying that, it's not a difficult situation, to execute this project. It's simple spirals and magnets, and with those spirals and magnets, hence why the capital cost is so low. To achieve a NPV of that sort of number, as outlined in the definitive feasibility study, it's only a 21 million US capex figure. That's extremely small. So it's a no frills, very simple operation of a dig, dump, separate from gravity spirals with magnets, you have your products. There's no grinding, there's no chemicals. We're a couple kilometres inland from the beach, next to a river barge system, which will transship onto ocean-going vessels. So from that point of view, we're very keen to see this project proceed. I've mentioned before the previous arrangement that was announced with the Chinese, whereby they would fund this with, we see superior value and certainty being secured by us, led by Richard and Simon, delivering this project. With COVID, we've got the approvals in place that we need from the police commissioner to enable us to mobilise and indeed construct and operate in accord with, you know, obviously the stated COVID protocols. But the key here is we have the approval to mobilise and get going with it. hence why we believe spinning out and raising the money ourselves, being in full control ourselves, is the way to go, and we're still targeting that for the end of this year, and I would expect to see some decent news flow coming out of that process in the coming quarter or so. In relation to the final statutory process, we have the mining lease application made and the mining lease warden's hearing conducted at site with overwhelming support for the project, and the Mining Advisory Council having already met and us having already addressed a couple of the inquiries that they've had has been very encouraging. So we're expecting an outcome with that very shortly. That will be the precursor to enable things to proceed. We've successfully secured the mining lease for the lime and cement, which is a project more than circa 15 times bigger than what this project is. So we have a very high level of confidence in the ability for us to secure this in a very timely manner. We obviously also want to get into the market while iron ore prices are where they are, but I need to reiterate that these iron ore prices aren't required for this project to be successful. If I can say it again, DFS at 132 million USD, right, was at $66 a tonne iron ore, 62% Fe, Platts CFR base, as on the basis of a 62%. So we would even adjusted our material to take into account the discounts off that $66 a tonne mark. So it's a very, very robust low capex project. So we want to be in control. Unfortunately, in times of the past where we've enabled others to be in control, we've been let down. Where we've had control, we've been able to deliver. And that's one of the key takeaways for myself as well as the biggest shareholder, is making sure we maintain that control. In relation to power and the Lay Enviro Energy Park, PNG's requirement for power hasn't changed. PNG is in dire straits when it comes to power. 13% of the country has access to electricity. 87% of the people are in the dark. The power that they do get is not good quality. It's variable in frequency, in nature, and also is extremely expensive. 3 to 4 times the price of what one pays in Australia. Not economic. Therefore, bringing cheap, lower cost power to the country is an absolute must-have for economic and GDP growth. The government recognises that. I've outlined it before. It's been outlined in previous quarterly reports. This project has been, we've been running this project for a number of years. In saying that, we did have Parliament approve the project, gave us a conditional approval, and to negotiate the power purchase agreement with a small group consisting of PNG Power and the State Solicitor's Office, etc. And that work is ongoing at the moment. These things do take some time, but I guess if you were to look forward in time, ask yourself the question, or have they missed the boat? Is there still going to be the demand for power? The answer is absolutely, we have not missed the boat, and that we actually believe our business is going to continue to evolve as an energy business, an energy/power business. We've got our general and typical sources of thermal power, but at the same time, we have a very, very strong overlay of carbon neutrality. We have a very strong overlay of renewable power projects we're currently looking at and working on, and that will be announced to the market in due time. But the Lay Enviro Energy Park is a very good base to transition off, to demonstrate a far superior price, far superior reliability, and far superior environmental footprint to a business as usual case in PNG. Now, people may ask, what is the business as usual case in PNG? It's burning heavy fuel oil and diesel. So you can understand how expensive, unclean that particular form of energy is for the country. Debilitating, to say the least. So again, that's just as a very high level overview. Do you want to just go down a little bit? Thanks, Anthony. So that's fine. So thanks for that. So just in conclusion on the various projects, I just wanted to draw the attention to the audience. I'm not going to read this verbatim. I just wanted to draw the attention of the audience to the right side second paragraph, Adderton Resources as well. We still have a 43% stake in that company, and we're expecting, as they have announced, further drill results to be imminently available. And the drill results announced to date have looked extremely attractive. I'm not close enough to the detail around that, but I have obviously seen when the company listed, we did the deal, the historical geological work and exploration that had taken place, and the areas that the deposit was open and were going to be tested. And I share a high level of optimism when it comes to seeing those sorts of results that we've already announced continued, and hopefully that will be that'll come out in short order. But the key here is that we're still planning to make that that shareholding available to shareholders once it comes out of escrow provisions that the TSXV have applied. So look, the way I've looked at the company, we've done all the heavy lifting. Yes, COVID has impacted all of us. It's impacting us now where we're working from, but the resilient get through it. And, you know, we've got a very, very good local team that's executing in PNG. We have a very strong corporate team. And I guess it's a testament to our relationships in PNG that we continue to see progress occur on ground, and those relationships have been established since, you know, the start of the decade, basically. But from 2012 onwards, 2011-12 onwards, those relationships have continued to be fostered. So they're not going away just because we've had some difficulties in the last 12 months in relation to COVID, etc. We're still continuing to foster those relationships. And me personally, again, as you know, the main shareholder, I'm very encouraged by the work that's being done. Yeah, it's frustrating for us in relation to what the share price has been doing. What can I say? Management and ourselves, as I mentioned last quarter, we took up 10 million shares and we took on the tax liability for, you know, circa was close to about $800,000-900,000 just before the financial year ended. Why would we do that if we weren't confident? It wouldn't make any sense. So, you know, look, we're very, very bullish and confident. We've taken large majority of the shares at this current level that we're at. So, you know, I'm a big believer you follow people who are willing to put their money where their mouth is, and that's what we've indeed done in more ways than one. So that's a quick overview. Maybe I'll hand over to questions from the respective audience so we can get into that, because I understand people will be short on time.
Thanks, Paul. Thanks very much for that excellent overview. And now moving on to some questions from our audience that have been submitted either prior to today's event or during the event. And don't forget, if you have a question, now's your chance to question Paul directly by the control panel. So don't be shy, and by all means, please submit your questions for Paul. Now, Paul, a few questions on the share price, recent performance in the stock. Like you already touched on it briefly, but any thoughts around where we are and what maybe catalysts might lead us to have a rewriting of the share price moving forward?
Look, I think that I think if we look at the various projects, I think that some of the catalysts that should re-rate the share price is, offtake confirmed on the mineral sands, a funding pathway leading to IPO, and the mining lease grant. I think those three key things should be catalyzers for the project, so that they can see a very clear pathway. So when I say they, shareholders and potential shareholders can see a very clear pathway to cash flow middle of next year, which is when we're planning to get into production. And we don't anticipate iron ore prices staying where they are. If they do, great, but when we don't need it, nor are we anticipating that. But it will still be a very cash flow positive business with very strong EBIT returns, well in advance of the capital, annualized well in advance of the capital of building the project. So we see that as definitely a catalyst. The other catalyst we'd see is any sort of power purchase agreement signed, and in the cement and lime, particularly the quicklime strategic cornerstones coming in and offtake being secured. I think that will give a line in the sand with regard to valuations of these separate assets. So there's some form of look through. If there isn't, well, it just goes to further justify why we should be spinning out and disaggregating, so the businesses can stand on their own and be mark to market with their peers as a pure iron mineral sands play or pure quicklime industrial minerals play.
Excellent, thanks for that, Paul. You mentioned disaggregation there. Maybe just a quick touch on that again, just to explain to our listeners about disaggregation, what it means, and what we can expect going forward with that strategy. Thanks, Paul.
Okay, so I think that the businesses, and I'm not sure if the quarterly report has a graphical as I'm discussing this, Anthony, you could pull up, but I think with disaggregation, the long and the short of it basically is that we have a number of assets in their own right as singular assets, as singular projects, have more value on multiple times more value as a single project of a number of projects we have, more than the entire market cap of Mayur. So you see here, I guess, the execution of the disaggregation strategy. You might want to just zoom in on that, Anthony, because it's a bit small on the screen that I'm looking at. Just on the graphical, is essentially to say, well, look, the copper gold wasn't core greenfields. We're able to spin it out, raise capital, join assets, and still retain 43% of the business. Our iron industrial sands is a totally different project. It's not greenfield insofar as it's been fully studied. We have resources, reserves, environmental approvals, the final statutory approvals around the corner. We have equipment already ordered in country, like a ship loader. We have the camp already constructed, awaiting for the equipment to arrive. The project is very much on the blocks to go into operations next year. So it's a matter of looking at that and then understanding, does that sit better in the parent? Well, today the answer would be no, because it's just simply not being seen as value, and you're basically functioning at a discount as a parent conglomerate. Similarly with the lime and cement, there's $390 million US in NPV, and it's not as if it's a project that, do we need that project? PNG does not have its own cement plant, and it doesn't have its own lime plant in the entire country. We have a captive market that we're going to take, and we are the closest to Australia with imports increasing of cementitious products, and have been for the last decade, and will continue to do so for the next decade, because production costs, power costs, environmental compliance, labour costs, all of those things in Australia are becoming more and more prohibitive. And that's why imports from Southeast Asia and the likes of Papua New Guinea will continue to increase and be more acceptable and sought after by the market. So the key here is what are we as a board and management trying to achieve? We're just trying to see that value is fairly attributed to where it belongs. And if it can't be seen by shareholders and investors in this parent conglomerate configuration and provide some, some diversity, provide some risk mitigation as an industrial minerals and energy company, we'll listen to the market and split it apart. And that's what we will continue to do unless we see a shift in relation to the current Mayur share price.
Okay, excellent. Thanks, Paul. Excellent answer. Now, a few questions here about Mayur's board and management. There's been a few changes recently. New directors, new executives appointed. What's the thinking behind all these changes, and can we expect more changes to your board or management ahead? Thanks, Paul.
Well, look, I've sort of alluded to that already, but look, the reality is we've had members on the board for between 3 and 5 years. We've had certain requirements that as a board have been met, but now we're transitioning into a different type of company. We're going to be a execution, construction and production company now, not a explorer and developer. So in doing that, I have taken the lead to look at how we're going to reshape the board and get the expertise, track record and access to the required markets that are needed, not only to give confidence to Mayur shareholders currently, but also to give incoming potential institutions and others the confidence that this is being led by experienced founders and developers that have their own skin in the game and a lot of it. And when we say that, I'm just talking from my own holding. I'm still a holder of about 1/3 of the company, so it's of all issued capital. So it's a significant chunk. Management and some other senior executives would take that up to circa 45%. So it is a very aligned business with shareholders. So what I'm trying to achieve is to inject new talent into the board that have a track record of delivery that the market will recognise, and I would hope to see some news flow on that in short order on how we're going to achieve that.
Thanks, Paul. Got a question that's come in here about the PNG government. Has the national PNG government indicated it wants to or will take an equity position in any of Mayur's projects?
It is still assessing that. To answer the question, I can't give a definitive yes or no. It's still being assessed. The lime and cement project, at the time, they elected not to because they were focusing their efforts on Papua LNG. You also had the Twinza oil and the Wafi Golpu projects. There's $20 billion US of projects to be executed. I'd have to say Total, Exxon, Oil Search, even now Santos with the Santos bid. If people couldn't see through, having operated in PNG, the PNG perceived risk versus actual risk, they wouldn't be doubling down and spending another $14 billion on 2 more LNG trains or establishing PNG's new first ever offshore oil and gas rig and a $5.5 billion copper gold project. So the reality is there's big, sophisticated, well-experienced miners and oil and gas players that are willing to invest significant chunks of money in PNG that are material for them and material for the country. So I raise that on the basis that, to answer the question, is that PNG to date have said they're reserving their focus and bandwidth and capital for those big projects. But saying that, they have indicated a level of interest, but we need to continue to move forward with our projects. They've got their hands full on quite a few different things.
Thanks, Paul. Yes, it sounds like PNG government's got a lot of things on its plate, a lot of developments there, which is fantastic for PNG. Now, looking at just PNG, I know you touched on this before, but you mentioned COVID-19. How is it impacting, I guess, your operations in PNG? How is Mayur managing the issue of COVID?
Well, fortuitously for us, that COVID and a lot of our development work, logistics, development, exploration, engineering, etc., has been done. So we're now really at a construction bid, which we've received, construction bid phase, and at the financing customer phase. The one thing I would say probably would affect us is the ability to get interested parties wanting to see, feel, and touch on ground, and doing road shows or site visits and those sorts of things. That's just because of the sheer international nature of interested parties and people having to quarantine there and back. So that sort of probably been a bit of an impact. However, we've got an extremely good on-ground team that continues to liaise with us. And you even look at, for instance, we've had villages that have never ever been in Zoom calls or video conferences or anything like that, all now being utilised either in Port Moresby or even out in the villages, having big IT setups there that can cater for that interaction. So look, we're doing the best with what we've got. COVID isn't going to be disappearing anytime soon. So I think it's those that can get on with the new normal and still maintain the abidance to the respective guidelines within the country are going to be those that continue to succeed. And I'd say even let's look at Adderton. Adderton, even under COVID, was able to, not on time and on budget, but under budget and before time, finish a 30-hole drill program with COVID and full compliance and everything like that as well. So, I think that there was ways of doing things and there's ways to manage. And I guess the way I'm answering that is that there has been impacts, yes, been impacts to everyone, but how we've managed those, I think, and how we've got our ongoing plan to address COVID should still see us progress quite rapidly through the final phases for the next couple of quarters.
Excellent, thanks, Paul. Yes, COVID is affecting us all, hence lockdown right now in Brisbane. So yes, we are very aware of the impact of COVID. So, question here about share incentives to management. Can you comment on these, just around that matter? Thanks, Paul.
Yeah, look, I did also get an inquiry through on general email, and just so on that, so it might be the same party raising that question. From the share incentive point of view, it just has to be understood the share incentive structure is no different to what has been advised when we first listed and then at the AGM. Where you might see in between then shares being issued, these are salary sacrifice shares. So just to be clear, management from day dot has, and key management from day dot have sacrificed 50% of their salary on an austerity measure to demonstrate their commitment to the company rather than taking cash out of the company. So taken a lot smaller salary and demonstrated that. So if you're seeing those sorts of announcements coming out, just look a little bit deeper into the detail and you'll see that that's a salary sacrifice shares being provided, not against general incentives.
Okay, thanks, Paul. And everyone, still got 15 minutes left, or about 15. So if you have any more questions, don't be shy. Now's the time to submit your questions to Paul. Now, Paul, a few other questions around projects. First of all, looking at renewable energy. Now, you mentioned PNG, lack of power in PNG, and that being a big issue for PNG. I noticed you mentioned renewables in the latest quarterly. What is Mayur planning in terms of renewable power regarding your projects? What are the options there for PNG?
Okay, so PNG has a number of different ways to tackle this. Obviously, distance, geography, topography, etc., do make it more difficult for transmission of energy around the country, i.e. gas. So I guess similarly with Australia and other Pacific nations, you've got wind, you've got solar, you've got the likes of hydro, and now there's obviously this focus on the various forms of hydrogen as well. And if we're looking at all that, there's also geothermal. So what we're got to focus at this point on is having a suite of different energies, whether that be renewable energies, whether that be biomass, whether that be hydro, whether that be geothermal, solar or wind. And it can roll off the tongue, and you see the people that are putting it out there just to, announce to the market something without a lot of substance. We're not interested in that. Everyone knows for our business, well, people that know our business knows there's a number of different forms of energy. There's electrical load, there's combustion load, and there's also base load to support electrical load. Now, if it was so easy, Australia would have shut every one of its coal-fired power plants down and just converted to renewables. But the reality of that being a bankable baseload to keep the lights on at all times, with current battery technology the way it is it just doesn't. The ability to transition or to set up like that is still a work in progress. We've done a number of different studies where we can generate, more than 60 megawatts of renewable energy just on our cement and lime project. However, we still need a baseload energy source as well. That the banks will say, okay, when the wind stops, the sun stops shining, and you're operating 24/7, what's your energy? Where's your energy coming from? And they're the real discussions that you've got to have. So where we see PNG with a huge opportunity, though, with water, with rivers, run of river hydro. The bigger large-scale hydros take a long time to build and have some fairly large ecological and landowner impacts on permanent sterilisation of certain areas. But look, from our point of view, we see PNG with the amount of rainfall it has, huge run-of-river hydro opportunities, large geothermal opportunities, large solar opportunities, and some wind opportunities. We'll announce at the right time what we've got with that. Our Enviro Energy Park also uses has a production of byproduct steam, solar, and has the ability to take biomass in our boilers. So there's a number of different features that we're looking at. But at the same time, we've got to keep that power cost reliable, and so the power cost low and the power production reliable.
Okay, thanks, Paul. Excellent answer. And a few more questions coming in now. About Oricolo Bay, first of all. What's happening with the JV with the your counterpart CNTI on Oricolo Bay? Any update on that?
Yeah, okay, so as I've outlined to the market before in a public statement, that they've been having challenges with COVID and their ability to mobilise at the Chinese end. I've clearly said in public announcements that we will look at other execution delivery strategies, which is what we're doing and which we will continue to do. And the reason why we have Richard Seville and Simon on board is to look at that and be in control of that delivery. Whether or not they're able to fix, amend, remedy their current situation in China is yet to be seen, and on that basis, we need to continue to move forward, having control of the situation ourselves. And so from that perspective, that's, I've been very clear and candid in my public statements in writing on this matter, and I maintain that position.
Okay, thanks, Paul. Another question here about the Central CCL project, Central Cement and Lime. What's the progress of the project qualifying as a special economic zone?
Look, the project has already been approved by the provincial government for special economic zone, like a formal committee documented full submission. And there is now gone, the special economic zone board has been established with a Special Economic Zone Act at the state level. And we have presented to the board, and we have taken that provincial approval, but also then taken the guidance of the Special Economic Zone board on the requirements for assessment, and that has gone extremely well. That's all I'm going to say about that at this point in time.
Thanks, Paul. We've got about 5 odd minutes left, so anyone else with more questions, don't be shy, now's your chance. And Paul, I know you might have mentioned this before as well, but Ortis Resources, which you're looking to spin out at least late 2021. What's the background to that, and what can shareholders in Mayur, I guess, expect from that listing of Ortis?
Well, the expectation of that is to, when sitting on its own, which is the mineral sands, the Orocolla Bay Mineral Sands project, which goes back to the Chinese, the question on CNTI and the Chinese on the mineral iron sands, same operation. What can be expected is that sitting on its own as a pure play, you'll get a mark-to-market comparable on an EBIT producing business next year, which will be a damn lot higher than what it is today. Our expectation is to raise finance in a structured way that limits dilution on Mayur Resources shareholders, so that it maintains the lion's share of the future economics of that project in a separate listed environment with Richard and Simon. Obviously, because of us having the lion's share of the economics, we will remain influential and have a strong position on the board to ensure that the ongoing success of that project is maintained. And that's how we want to be seen with shareholders, that we've got their best interests in mind, and we're trying to maximize the value that's going to come out of that by limiting the dilution of the future economics through a number of different funding sources that we can pay back that are non-dilutionary.
Excellent, thanks, Paul. Well, about 5 minutes left, so not much time left, but perhaps some final comments, Paul. I guess it's been a tough year for everyone with COVID, but how are you seeing the rest of the year for Mayur and PNG? Are you still bullish on PNG and Mayur? How are you seeing the future for the rest of 2021?
Well, look, rather than me speaking the book, go and have a look at Wafi Golpu, go have a look at Total and the $14 billion 2-train LNG facility, the $5.5 billion copper gold project, and the Twinza offshore project, $2 billion offshore project. The $2 billion offshore project and the $14 billion 2-train project is literally adjacent to our lime and cement project. It's a good place to do business. It's convenient. There's deep water there. You've got your own access, your own land. There's a set pathway to get projects up, having had the $18 billion LNG facility already established there, and this really being an adjunct to it. So I see these companies voting and putting their capital that is globally mobile to work in PNG is a testament to their belief in doing business in the country. We share that view, so you can take that as a point. I'd suggest that we'll see catalyzers with mining lease grants, offtake agreements signed, and strategic cornerstones coming in, and non-dilutionary funding being secured for at least one, if not a number of our projects. So I'd see that being really good for Mayur, because now we're getting into the pointy end of, hey, we can build this now. Let's go construct and build this with the construction bids we've already received, which will probably, enable the market to go, oh, okay, right, these guys have got through it, or they're now building this business. I probably, in closing comment, I'd like to probably point out, people talk about PNG risk, and I've had this discussion with a number of people. I've said, oh, okay, there's PNG risk. Please quantify what you're meaning. Give me physical, real-life examples that are appropriate and applicable and comparable to where we've situated ourselves in the country, and give me examples why we should be concerned. And people use the political risk and those sorts of things. What is the political risk? So Westminster system, we chose to invest our money up here. We could have invested in Australia. We're veterans in Australia in development, but we chose to invest our money up here. Why? Because, if you talk about political risk and the changing of the chairs, we've had more prime ministers than most countries have, and the certainty of getting projects up in Australia versus PNG, we've done, and I think I said this at the Noosa conference, we've done what most companies would struggle to do in the short space of time we've been listed for one project, never mind 3 major projects. So we've got all these from concept to shovel ready stages in that period. So now this next 6 months, I'm excited, definitely, because it's now a building phase. We've got to get the offtake and funding, and then we start to build. And so from that perspective, have a look at the share price and have a look at the future earnings of the company, and then decide for yourself and sort of ask yourself, why has every broker got between $1 and $1.40 on us as a share price target? When you look at the different banks that have and groups that have covered us from a research point of view, there's obviously an arbitrage and disjunct, and it's my job as the MD to address that for you shareholders and for myself and for incoming shareholders to get the confidence and comfort that I'm going to be working, night and day to ensure that occurs.
Excellent. Thanks again, Paul. Great response to those questions, which I'm sure you get every day of the week. So thank you for that. Now we're nearly at the end of our 1 hour, so I'd like to let everyone get back to work from our desks. So just wrapping up, thanks again for those questions. Thanks everyone for your attendance today. We've endeavoured to answer as many questions as we could. Those we didn't get to, we'll try and get back to you with direct responses. So thank you again. You can reach out to us via the website contact details if you didn't get your question answered today. A recording will also be made available after the event, so look out for the recording if you missed anything today. Again, please subscribe to our company news via our website, and follow us on our social media platforms. We're on Facebook, LinkedIn, and Twitter. So thank you again, Paul. Very much appreciate your time today. Thanks again, everyone, for tuning in, and we look forward to giving another update next quarter, which will be around the end of October. Thank you again, guys, and see you again next quarter. Thanks, Paul.
Thank you. Cheers. Bye.
Cheers. Thank you.